Ladies and gentlemen, good day and welcome to the H1 FY26 earnings conference call of Influx Healthtech Limited, moderated by Capital Bridge Advisors. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during this conference call, please signal for an operator by pressing star and then 0 on your touchtone telephones. I now hand the conference over to Dr. Munir Chandiwala. Thank you, and over to you, sir.
Good afternoon, everyone. Thank you for joining us for the maiden earning calls of Influx Healthtech Limited. I hope you have had a chance to review our financial results and investor presentation, which are available on our website and on our stock exchanges. Joining me today are Mr. Ashish Shah, our CFO, and Mr. Rishit Zaveri and Mr. Rutul Shah from Capital Bridge Advisors, our investor relation consultants. Allow me to begin with a brief overview of Influx Healthtech and what defines us as an organization. Influx Healthtech is a contract development and manufacturing organization specializing in nutraceutical, cosmetic, pet care, home care, and Ayurveda. Our integral model provides end-to-end solution from product development and manufacturing to regulatory support, enabling our clients to focus on the core strengths such as innovation, brand building, and commercialization. Our clientele includes many companies like many multinational corporations, high-growth D2C brands, niche healthcare providers across the domestic and the global market. We operate with 3 manufacturing facilities in Palghar, certified under GMP, HACCP, ISO 22000, ISO 14000, and we have an NSF accredited FSC 22000 plant, and also US FDA registration. Innovation continues to be one of the biggest strengths. On average, we launch approximately 2 new products every day, a reflection of both our agility and our ability to respond quickly to the evolving market trends, while maintaining stringent quality and compliance standards. Moving to our operational highlights and business updates. During the first half of the year, we undertook several capacity expansion and operational upgrades, all funded entirely through internal accruals, reflecting our capital efficiency and execution discipline. Our tablet manufacturing expansion was done, and we can now deliver 10 to 15,000 bottles per day, with the total investment of 60 lakhs. We have a new high-speed capsule manufacturing machine commissioned with a capacity of 1,22,000 capsules per hour, which increases our capacity with the total investment of 34.48 lakhs. Multi-line production expansion have been done. We have added 480 kg per day tablet production, which can give 24,000 bottles per shift. Also, we have added liquid production lines. We have added 32,000 sachet per shift production capacity with the total investment of 1.91 crores. All these projects have been commissioned and are now fully operational. During the same period, we have also strengthened our compliance and quality framework. As I said earlier, we have received FSC 22000 certification from NSF International Strategic Registration, USA, which is valid for 3 years for the manufacturing of health, dietary, and nutritional supplements. We were also granted a 5-year manufacturing license from FSSAI India for newly established rented facility. This recognition reinforces our commitment to global quality benchmark and regulation excellence. Moving on to IPO proceeds and utilization. We are deploying IPO proceeds to build a state-of-art facility of nutraceutical and veterinary plants, which will help to capture growth opportunities in this fast evolving categories. We are also evaluating specialized investment in advanced machinery within our cosmetic division to enhance the capacity and product differentiation. Of the IPO proceeds, 4.1 crore have been deployed towards capex, 33.6 crores remains in the bank, and 5.7 crores have been utilized for general corporate purposes. We continue to deploy the proceeds in the capital efficient manner, focused on delivering optimal returns and creating long-term value for all our stakeholders. Next, on the financial highlights. Revenue from operations stood at 66.8 crores in H1 FY26, registering a 39% year-on-year growth. Segment-wise, nutraceutical contributed 60.1 crore, up by 36% year-on-year. Cosmetic, 3.4 crores, up by 59% year-on-year. And Ayurvedic products, 2.7 crores, up to 112% year-on-year. And the other segment comprising of veterinary and home care reported 0.6 crore, 20% year-on-year increase. EBITDA was 14.7 crores, up 61% year-on-year, with margin expanding 302 basis points to 22%. Our PAT stood at 10 crore, up 78 year-on-year, with a margin of expanding 329 basis points to 15%. During H1 FY26, we incurred 11.7 crores in capex, reflecting continuous investment in infrastructure and capabilities. Our balance sheet remains robust, with cash surplus of 36.6 crore as of September 30, 2025. Cash flow from operations stood at 1.2 crore. In closing, none of this achievement have been possible without the commitment and passion of our people. Since our IPO, the team has demonstrated exceptional ownership, focus, and discipline, positioning Influx for the next phase of growth. As we look ahead, our focus is to double the business by FY27 with the similar margins as we strengthen our leadership across nutraceutical, cosmetic, veterinary, Ayurveda, while driving sustainable value creation for all stakeholders. Thank you for your continuous trust and support. And we will now look open for floor for question and answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may enter star followed by 1 on the touchtone telephones. If you wish to remove yourself from the queue, you may enter star followed by 2. Participants are requested to use only handsets while asking a question. We will wait for a moment while the queue assembles. To ask a question, you may enter star and 1. The first question is from the line of Jatin Agrawal from Manish J. Mundada. Please go ahead.
Good evening. Am I audible?
Yes.
Yes, sir. Please go ahead.
Yeah. Hello, sir. So my first question is, so nutraceuticals are contributing 90% of your revenue. So is this the strategy that you have taken up, or are you trying to diversify going forward into cosmetics and veterinary and home care?
Yeah, see, Nutra, we are known as a Nutra company because it's Nutra, our operations were 23 years old. And cosmetic we have started in 2019, but actually the main, after post-COVID in 22-23, we have done better in cosmetics. So the idea is to focus on all the segments because we don't want to be dependent on Nutra, but over the years we have been doing Nutra well, so we are known for that way, and cosmetic veterinary are very recently new, so we will cope up, definitely.
Also, sir, could you explain me the margin differences if you are suppose scaling? So how much would Nutra be going forward if cosmetics and veterinary scaling up?
See, Nutra strategically we are adding new concepts also. In future you will see a lot of announcements maybe of new technology and all introducing. So there we will try to take the margins more. If you see Motamoti, the margins are approximately, gross margins are 35% in Nutra. Don't take me right, it depends on product to product. But just for a brief knowledge. And cosmetic is much better. So once we grow in cosmetic, hopefully our margins still may go better. Veterinary and Ayurveda is similar to Nutra.
Veterinary and Ayurveda Okay, similar to Nutra, but cosmetics, you are expecting better margins.
Yeah, we have better margins. Once we scale up, we should do better. Even Nutra strategically, when we are, like there are innovative products, we will able to have more better margins.
Okay. So, it's safe to assume, sir, that your current PAT margins and EBITDA margins are going to be sustainable, and we should also expect a slight increase going forward once we
can. We'll try to increase. We'll try our best. But it's going to be sustained because we are since long this has been sustained. So in future also we look forward that we'll able to do it, and if we get a chance to increase, why not?
Okay. So my second question is, sir, currently I just went through your result today and the presentation. So it was 32% of the IPO funds have been utilized till now. So could you give me a timeline as to how much would it take to develop your facilities for your veterinary?
The H1 next year is our target to get everything in place. Maybe because of rains, we are 1 month or 1.5 months behind, but we'll cope up because we have already started to place orders and advances for the IPO machineries, actually. So we are in track. Maybe by H1 we should start next year. That is 26-27.
26-27. Okay. And so with this facility developed, what would be the revenue run rate, if you could give me a certain percentage growth that you are expecting?
Am I allowed to give? So the percentage is basically as I in my presentation I have said, we can double our current like the scope what we are doing percentages, and by maybe when we utilize completely, because it's not going to happen that in the first year we'll able to utilize everything, but over a couple of years, 2 to 3 years, we can reach up to a benchmark of approximately 500 CR. This is a figure. Now capacity is not only maybe the infrastructure, because if we want more capacity, we can increase the machineries also at that time. So at that time, if we take the proper decision as per the orders we have in hand, so we can easily cross that barrier.
Okay. So this would be suppose around 2 to 3 years it would take.
2.5, 3 years, yeah. Yes.
2.5, 3 years. Okay. And also just my last question would be...
Sir, I'm sorry, could you please return to the question queue?
Sure. Okay, sure, ma'am.
Thank you. Participants, at the request, please limit your questions to 2 questions per participant. The next question is from the line of Shruti Malpani from Earth AIF. Please go ahead.
Hello, am I audible?
Yes,
ma'am.
Yeah. Hi, sir. Good evening. Congratulations on the great results. So I'd like to ask, I want to understand how the company is managing the working capital. So usually, other companies are looking at short-term borrowings, but since we have no short-term borrowings in this half, so can you explain a little bit about, payable cycle and the receivable cycles as well?
So we never had a working capital issue. We are a debt-free company. And currently we don't have any as such plan for any borrowings, because we still have not utilized our IPO funds also. So we don't require actually right now. Payment cycle is good enough. We have bettered than the last what present we had done in the RHP or the DRHP before the IPO or in the IPO. So our that debt cycle has gone down. So we have worked on that, and we are still working, which in next quarter you will see still better.
Yes, so I wanted to understand what kind of contracts or payment terms do we have with the vendors, both with
generally industry-wise 60 days is the days which runs. If there is an old company and a renowned company, we pay also in 60 days. We generally get also in 60 days. This is the general cycle. But if there's a new company, we never give credit. After few transactions, we can have we have a discussion of deciding the credit cycle. Generally, for new, it is advances.
So, I was just trying to calculate the days payable and receivable. So I could see a negative cash conversion cycle in the sense that we are, taking more than 200 days plus 2 for paying, and then we are getting in 100 plus days. For March 25, I'm stating this figure.
Yeah.
So it's like that trend is going to continue, and we're going to get more, leverage from
that. Generally, the trend is 60 days only. I think in earlier presentation also before in the IPO or something, this figures can be seen because of one company only, that is Novus Life Science. It's one of the largest company. So they sell they actually give their raw materials also to us. So unless it is utilized, we don't pay them. So it is the strategy, that's why. So that we have asked them also to work on this so that our figures are much better. So they are improving on that, and we'll definitely have a better cycle in this. So technically, the cycle is only limited. The average out is happening because of one company only, which is actually, they supply the raw material also. So as per our company strategy, unless we utilize their ingredients, we will not pay them. That is our deal. So that's why unka agar 100 days ho gaya, so we will not pay them before we utilize that before 100 days. So that's why it's showing that way.
Okay.
And that's why we are not, we don't require any working capital.
Okay, sir. Got it. Now my second question, so I just wanted to understand, I think by FY25, we were at 93% utilization levels for our nutraceuticals. So the growth that has come this year, so is that only from the existing ones? Because I think towards September start only we had commissioned the new high-speed capsule manufacturing machine. So how much of that was also part of the revenue or the top line that we can see for H1?
Yeah, I'll split this answer into two. The second half of the last year, 24-25, actually we were doing average of 10.5 CR approximately. So the capacity we were slowly increasing. So still now we are increasing the capacity of production packaging, because packaging was the problem. Output of machinery of producing tablet capsules was not that challenging. Rather than packaging was a major challenge because the products were accumulating. So we have worked on that. We are still working on that. So it will go still better. And we have expanded our unit. We have expanded around 22,000 square feet. And our capacity, the new units have come for granulation. So that has contributed to it. Still a few lines of packaging are coming in this month also, in next. So this is going to happen. So we are working on that. We know what's our minus point, and we are trying to get it right.
Okay. Thank you so much. I'll join back the queue.
Thank you. The next question is from the line of Shreyans Gathani from SG Securities. Please go ahead.
Hi, good afternoon, Munirji. So I had a few questions. So the first one is, what is the top 10 client concentration, and what's the revenue from the top client, in terms of percentage?
So approximately 30-40% is the top 10 clients' contribution in this.
Okay. And the top one client, or you cannot disclose that?
Sorry? Top one?
Yeah.
It's 18 crores. Last year it was 18, approximately, yes.
So this half, it is the results that we declared, that is 18 crore, or sorry, I'm a little confused.
Full year it was.
Okay. And if you could...
Last year it was.
Okay.
And this year if you want, I can get back to you, because I think
sure.
we have to... Yeah.
And the second question was on Tanzania approval. Where are we with that? And given the political situation, are you seeing any delays with that? Or
So we have already paid the fees. 11 December is our audit date.
So that is a virtual audit? Or?
No. They are going to come, sir. So they have taken an 11 December date. They had requested for a few days, and 11 December was the mutual agreed. So it's on track.
Okay, got it. And what would be the current run rate, monthly run rate? You said you're doing 10-11 crores. So as of with the expanded capacity is September, October time.
So with the current, I think what we have achieved, it's around 12 CR approximately. 12.5, it is that much.
No, what I was trying to mean is like, where do we close FY27 by? Like, you should expect similar, like 66 times 2, or?
We will definitely do better, sir. We are on the expansion mode and in the full mode of taking it forward. Too optimistic to say the figures right now on the call, but yes, we will maintain the speed. Try to take the speed little further also.
Okay. Got it. That's all.
Sorry, I was diplomatic in answering, but okay, I've got it.
No problem. Thank you so much.
Yeah.
Thank you. The next question is from the line of Tahir Hyderabadwala from Growbiz Fund. Please go ahead.
Hello.
Sir, we are not able to hear you. Could
Hello.
you switch to your handset? Yeah.
Hello. Can you hear me?
Yes, we can hear you.
Congrats first of all on the good set of numbers, sir, and thank you for the opportunity. Sir, I wanted to ask, we expect that to double our revenue in FY26, but when we see the capacities utilization for both Nutra and our cosmetic, it's around 90-95%. So how do you see the growth coming in from the veterinary foods?
So if you see our presentation, what we have sent today in the exchange, we have already, released the capacity. So our capacity is around Nutra is 65. The capacity, what you are telling is the last year. So, and we are in the mode of expansion continuously, sir. So the capacity is not only by the infrastructure. The capacity is also by machineries, increasing the machineries with how we did in capsules. So we did 5 times, similarly in tablets. So it's in a continuous mode, sir. So right now, if you see in this position at this time, in this by September 30th, we have a 65% capacity utilization in nutraceutical, cosmetic approximately 60%, and in pet it is 75%. Keeping that in mind, in the IPO utilization, we'll be releasing a lot of capacity service. So our because that by H1 maybe, so we'll increase it to 2.5 to 3x.
Okay. And sir, second question was on the veterinary market. On one call, you said that the veterinary market, you expect that to become big like Nutra market in the next 5 to 6 years. So when we see the current market of the veterinary food is around 15,000 CR. So when we expect to go veterinary to the Nutra market, it is like 50-60% of the growth per annum of the industry. So do you think it is possible? Like,
see, veterinary is going to grow. I don't know where I said that it's going to become like Nutra, but see, veterinary is right now how Nutra was in 2010-11. So next 5-10 years is very amazingly well placed this market. Veterinary is going to grow, sir. If you see around yourself also, you see a lot of shops coming in, lot of veterinary, pet parents nurturing the pets. So there are a lot of things which is happening once it is legalized, because we expect that pets will be under FSI soon, hopefully. Then the licensing and everything will help us to grow still better. The industry is amazingly poised, and there is a lot to do in this industry because very few Indian players are there in manufacturing. Leading players like Pedigree or Royal Canin, they are still imported mainly from the international market. So we have been able to achieve the production. We are able to achieve the formula for this, and we want to scale, sir. So there are it's going to take time, but yes, it's in the positive right way. I feel personally it will grow better pace than the Nutra, in my perception, personal perception.
okay. And my last question on this, sir, when we expect, what is the revenue mix expected? Because veterinary is around 1% of the revenue from FY25 perspective. So what do you see in the next 3 to 4 years for the revenue mix between Nutra, cosmetic and veterinary?
See, Nutra is going to grow at a good pace because I said double the capacity of the Nutra also going to go double. Percentage-wise, it may remain close by to what it is right now, but value-wise it will grow. So maybe I can say it will grow by 2%, for example, but 2% maybe does not make that sense, but 2% will become 4 CR or 6 CR. So that is how it is going to multiply. Our main focus is in veterinary cosmetics also. That is, we have taken, surprisingly, if you see, we have got good orders in Ayurveda. We expanded by 125 approximate percentage, 112%, I think. So, which is amazingly doing good because of few incidents like Shilajit and all, which are doing very good in the market. So similarly, veterinary will have its boom. It will have its right time, and it is in the right time. I feel it is growing, sir, because the amount of queries we are getting, the amounts of small players which are entering. So this is the same strategy which happened for Lutra 10, 15 years back, and which we can see right now it's shaping up.
Okay, sir. Okay. Thank you. Thank you for the
Thank you, Tahir. Yeah.
Thank you. The next question is from the line of Nishita from Sapphire Capital. Please go ahead.
Yes, hello. So I just wanted to know what is the total capex that you are doing in FY26 and the capex amount for FY27, and if you can streamline all the capex that we've done till now.
So the IPO utilization capex?
No, the capex in total for FY26, not just from the IPO proceeds.
Not from the IPO. So approximately the capex is, so we have expanded 25 to 30%. So it is 23 crores for the manufacturing facility we have done in Nutra. And we have deployed, that is the one. So 23 crores is for the IPO funds, actually.
Okay, so the 23 crores...
No, yeah. No. The question is, you want?
I want the total capex amount that we are planning to do for by the end of FY26 and for FY27.
So that is the IPO utilization only. So basically it is around 20 to 23 CR for Nutra and 11 CR for veterinary. Approximately this is the figure. This will be utilizing in this. See, we have done our own internal accruals also. So that is around maybe last year. I don't have the exact figure right now, but before September we did around 4 to 5 CR the internal accruals thing. So you can add the IPO on this funds. Hope I got your question. If you want to more refine, you can let me know.
Yes, I understood. So 23 crores is the total capex that we are planning to do for Nutra and 11 crores for Vet. So out of that, how much we've already done?
So we have done for IPO utilization we have done 4.1 CR, no? And internal accrual, so it's around 11.7 crores in capex we have done.
Okay, so from IPO proceeds, we have already deployed 4 crores of funds for the capex.
During H1 FY26, we have incurred around 11.7 crores in capex.
11.7 crores.
Yes.
Okay, understood. And
this is an investment for our infrastructure and the capabilities what we are doing.
In total for FY26, we are planning to do 34 crores of capex.
By next year, that will be H1 26-27.
Okay, understood. So what will be the capex for H2? I'm sorry?
11.7 we have done in this year.
Yeah. And for H2 FY26, like this, how much capex are we planning to do?
So we have placed some machine orders also for this. So maybe around is 5 to 6 years approximately. So we have booked like a retort plant. We have booked the veterinary high-speed machines. So this are all IPO utilization also we have started to do it. Approximately maybe by March we should utilize, don't quote me right, but somewhere around 5-6 years. And once the infrastructure of the IPO is ready, then it will be utilized as per the IPO funds.
Okay, understood.
We have committed.
And my second question would be, you mentioned that right now we are at the run rate of 12 to 12.5 crores per month.
Yes.
So does that mean that for H2 FY26 we can do a revenue of around 72 crores?
We have a plan of around 150 plus approximately.
For H2 FY26 we plan to do 150 crores of top line.
The total. No. In the sense total there are years.
For the total of FY26 we plan to do. I'm sorry?
H2.
For H2, 150 crore.
No. H2 will be around, total will be that much. H2 will be around 82 this year.
Okay, understood.
Full year I'm talking about 150 plus somewhere. I don't want to be sounding very high this way, but at the base rate we should be around total year. H1 and H2 should be around that much. More than that maybe.
Okay, and do we face any cyclicality in our business, like say H1 is better than H2? Is there a cyclicality in our business?
Not as much, but it's same almost. It's almost same, ma'am. So we don't have that much issue in the. It's not a season wise. There is no as such things.
Thank you so much.
Thank you. Our next question is from the line of Ranjit Kapoor from Vita AMC. Please go ahead.
Hi, Manish. Congrats for a good set of numbers and very nice presentation, man. I wanted to ask about your nutraceutical business. It still caters around 90% of your core business. You mentioned very right that you have been expanding towards Ayurvedic and cosmetic. But still, nutraceutical business is very concentrated. So do you have any plan further to remain reduce the concentration and remain high growth?
Yes, sir. Definitely we don't want to stick to one category actually. So you see why we are our 90% is Nutra. Since 23 years we are doing this. Cosmetic we are doing since last 3 years. Veterinary also last 2-3 years. So it will take time to build. For sure, it is going to contribute more. If you see category-wise or division-wise, there is a growth in each category. So cosmetic also grew, veterinary also will grow. So the contribution will be there, no doubt. We are known for Nutra because our identity is that way of the company right now, which we are going to. We are on the way to expand. We have new machines coming in, cosmetic, new technology. Veterinary, we are expanding in the IPO. To a lot of, let's say we are doing 1,000 kg per day, for example. So we will be doing 1,000 kg per hour now. So that all expansion we are going to do, which will build up the ratios better of the other division.
All right. And about this capacity utilization, you mentioned that nutraceutical is around 65%, if I'm not wrong, and cosmetics around 60%.
Yes.
And pet supplements and home care 25%.
The capacity is a very a question which is a googly actually for me. Because generally what happens, capacity we keep on increasing, sir. In CDMO, we have never taken loans and all such and made a big capacity and run for orders. It's a vice versa. So we have been expanding since 70-90%, I think since 20 years I am that way only. So we want to be a little frugal. We want to expand when required. So this 60% can become capacity utilization may become a 50% if we add more machinery to it. So as per the orders, we'll do it, sir. We don't want to overburden our capex and everything. Whenever required, we can take decision. We have a good plant. We have a 137,000 square feet setup plant. Whenever we required, we can switch the old machine, put the new machine, add additional machines. So this all can be done internally. It's not about infrastructure. It's about upgrading the machines also, which can be done, when required.
Yeah. Understood.
And capacity is not, the figure is a little bit, you don't have to think much as I feel. It will be good only, sir.
And would you like to update about this new facility? Any status on that?
Sorry?
New facility.
The IPO process you are talking?
Yeah.
Upgrade in the sense?
Any update on that?
Update. Okay. So the work is going on, sir. We have the plinth level and all done. We should be able to do it. H1 May, we should be able to start in the next 26-27. So that is the update.
All right. And your tablet manufacturing, that multi-line production is doing around 50,000 bottles a day, if I'm not wrong?
No, 15. 10 to 15,000 bottles, which we have rented facility and we have added our capacity.
And capsule is around 1,20,000, right? Per hour.
We got a new machine. It started well. I think slowly the production will peak. The operators, everyone is now aligned because it's a complicated machine, but slowly we have peaked up and it will go in a best of efficiency in short time. We have orders in hand and we should able to utilize it properly.
Okay. And that high capacity pet food production line, which you set up, cost around 12 crore. It has a output capacity of how much? How much kg per hour?
1,000 kg per hour.
1,000 kg. Okay. That what you mentioned. Yeah. Okay. Understood. Fantastic. Yeah. All the best, man. Yeah.
Thank you, Ranjit. Thank you.
Thank you. The next question is from the line of Damodar Baliga from DB Investments. Please go ahead.
Sir, good evening. This whatever increase in capacity with the internal accruals that has been done, it is basically with the, adding up the packaging facilities, correct? Is that understanding is right?
Both. It can be both, sir.
Sorry?
The contribution is both. Manufacturing also we have added. So syrup, liquid manufacturing, we have doubled capacity. Yes. Okay. The partial answer is yes to you because we have increased our bottling capacity also.
Okay. Sir, in the pre-IPO calls which you had done one or two, you had mentioned this new facility with the IPO money would come by, first quarter, maybe in April or May you had mentioned. Now you're saying that it will be by H1 you're saying. So that means September. Is there anything, any delay? Huh?
No. See, it will be somewhere in this date only, in the H1 first quarter only. So, see, the delay, because of rains, definitely there is a delay of 1.5 months. We don't want to deny that. But we'll cope up, sir, because that message has been sent and we are to the civil engineers and everything, and they are on their toes. So, April, May, June, this is the cycle.
Earlier, maybe you were planning for June, it would have got delayed by a month or so. That's what you're saying.
Yeah, we are planning May, June. Yes, you are right.
May, June.
And still we want to finish that in that target. We'll try our best to do it.
Okay. Sir, now I know many people have asked, you have already mentioned that it will increase the capacity by 2.5 times, so which will fetch you around 500 crores of revenue approximately. So my question is, after doing this expansion, do we have any more spare capacity to increase or add any more machineries in the existing land bank that the company has?
Yes, why not, sir? So we will be going with some capacity in mind, which we have thought for the IPO funds. We can definitely upgrade it more. It's not the highest machines we have put in this capacity, in this. So we will be having around 75 to 80,000 square feet plant for Nutra, which is more than the existing plant we have. So the capacity will be amazing.
No, sir, my question was, do we have land or the space to do that after doing this, the latest expansion?
So the IPO, we will utilize the complete land. We also have spare land available in the area, which is more than 90,000 square feet. So if you want to expand more, we can always do it. But in this also we can expand, sir. We can add more departments.
By adding the okay, fair enough. Sir, my second question is, I know you have mentioned that, veterinary and cosmetics you have entered recently, whereas the nutraceuticals you have been there for last more than 20 years. My question was, Ayurveda segment also you have been there since 2014, I think. And your father himself is, I think, Ayurveda doctor. But somehow that segment hasn't grown even after so long. Any particular reason?
Yeah. So there is a reason why, because what has happened in FSSAI, Food Safety Standard Act, 430 herbs have been listed of Ayurveda into FSSAI. So majorly what happens, see Ayurveda, maybe I may be lecturing now, but Ayurveda technically in this area, region, in the metros and all, are not preferred by MDs. Maybe I may be wrong, but this is our perception which is there. So people are ready to write FSSAI products. So that's why there is maybe Ayurveda, some contribution is going to FSSAI also on Nutra segment. Because wherever possible, let's say people want to make ashwagandha. So ashwagandha can be made in Ayurveda also and in Nutra also. So people are more comfortable to make under Nutra because it has more scope of entering into a bigger market. Ayurveda has a limited market, no doubt. It's an amazing market, but maybe when a client comes, so he is more comfortable to make into this. See, we have grown by 112% this quarter. If you see, we have done good in Ayurveda, better than before. Still best can be done. I agree to that. But we have done
your focus would be on more on cosmetics and veterinary, correct?
Yes, because what happens, Nutra cosmetic goes hand in hand because there is a new concept of cosmeceuticals. So what is happening, any person who is making a skin care, so it can be made under Nutra also, it can be made under cosmetic. So it complements. See, as a company, all our divisions are complementing each other. Ayurveda is like a typical drug, which is a technical person of Ayurveda only generally makes. New D2C brands generally which are coming majorly, they want to make a cosmeceutical product, hair, skin, nails maybe. So generally they prefer FSSI and cosmetics. It is that way. So maybe that is one of the reasons.
Okay. So my last question is, generally our debtor days used to be in the range of 60 days, 55 to 65 days is the range that used to be. But in March 25, it crossed 112 days. So one, has it been, if you can share the reason for such a sudden increase in the debtor days during, March 25. Second is, has it been, the payment, everything has been realized and what is the current state?
So the 113 days or the debtor days which is rise, I again said that it is due to one of the major clients, Novus, because generally they supply their raw materials, sir, and we also, so that is the reason.
No, sir, if they are supplying the raw material, see, there you, debtor days is the supplies that you have made it to your customers.
Yeah. So generally it is the, jo bolte na ki round off karna, that is the reason. But it has been reduced now.
Achha.
We are working on that to reduce it.
So now, to earlier participant also you were mentioning this negative working capital is happening because they supply the raw materials, correct?
Yes.
But generally, what is our payment terms with the vendors?
Generally, it is 60 days majorly. If it is renowned, let's say sometimes it's vendors you are talking about for Influx.
Correct, not
so maybe it is advance or maybe advance or 60 days. Generally, it is there. Majorly, it is that way.
So this negative working capital is mainly happening because of this Nova supplying the raw material, correct?
Yes.
Okay, fair enough, sir. Thank you very much, and I wish you all the best.
Thank you, Damayanji. Thank you.
Thank you. Ladies and gentlemen, if you have any questions at this time, you may enter star followed by 1. The next question is from the line of Harsh Sheth from PI Square. Please go ahead.
Hello. Hi, sir.
Yeah, hi, Harshji.
First of all, congratulations on a great set of numbers. I just wanted to get an outlook about the companies from your perspective. So, what are the companies' key focus going to be in the next 12 to 18 months?
How we are going to focus ourselves?
So, what
new additions we are going to do?
What new additions, or what would be the major segments that you'll be focusing on that would just help us drive the growth going forward?
Yes. So, majorly we will be starting a beverage line, which is another segment itself. We already have placed order for the line actually. So, it's 10,000 bottles per hour capacity. We have already placed orders. So, that is one of the segments we want to do. We are doing retort. If you see our presentation, there is a retort facility also we have ordered. So, again, we will be entering into RTDs, that is ready to drink market. We want to enter into nutrition space only. We don't want to do like a Coca-Cola or Coke or something like that, but we want to enter into a segment where we can provide nutrition solutions to it. So that is one of the key things we want to enter. Also in RTD space, we will be getting machines which are a little bit unique. I think hardly anyone has that. It's called Easy Snap technology. So it's like a card, you just press it, you remove the liquid from inside, direct pour in your mouth or pour in the bottles or a glass. So this all technology we see. So Nutra, we want to bifurcate into beverage segment also. That is our key focus also, because that is one area where we can still have new set of customers. It's a new market where we can explore a lot. keeping intact our existing nutraceutical companies. So that is what we want to go. And yes, veterinary will be expanding a lot. Our R&D also is going for a lot of like turtle foods, camel, this all, because we want to enter into international market with the veterinary supplements also. So this is all our focus, which is where we want to put into it.
Okay, sir. Got it.
Thank you. A request to all participants, please limit your questions to one question per participant. The next question is from the line of Hemant K. from Anandan Capital. Please go ahead.
Hello. Am I audible?
Yes, sir. Yes, please go ahead.
Yeah. Thanks for giving me an opportunity, and congratulations on a good set of numbers. So I have one question. You just mentioned that you are doing, the R&D. So I just wanted to understand the size of the R&D team and the spending in terms of the revenue percentages which we are putting into R&D.
So basically, we have a team of 8 members, qualified members with support staff. So this is the F&D team. See, as such, there is no much expense in the R&D because we are formulators. We are not innovating any new product. In the sense, we are not bringing any new molecule. So the set of formulas what we are developing, let's say we want to make a new bar, we want to make a new pet food kibbles. So with the existing raw materials only we are trying and matching this as per the customer requirements and all. So that's why there is no as such capex R&D involved in this. Yes, the manpower which is utilized, that is my expense majorly. So so it's not that much. It is big expense for us in the R&D as such.
Yeah, and in the veterinary segment, we are focusing mostly on cat food, or are you looking at any other animals? Because I think mostly the dogs are one which kind of have the bigger market, I believe.
Yeah, see, right now dog is a bigger market. We are doing that. Our capacity existing, which is there, is majorly occupied for dog foods. Dog is a good market. Cat is coming up, cat market. So both the products are ready. We have developed dog adult foods, then puppies. There are all different categories which are there, even for tablets, nutrition. So we call it petraceuticals now. So that division also is going on because now there is a prescription market also in pet. So what we are talking about, kibbles and all, or expansion, that 1000 kg, this is all kibble food we are talking. But there is a market which is there for nutrition because for support therapies, which we call as the petraceuticals, which is coming up very well. We have small lot of clients right now, which we believe that we are empowering them with the the minimum MOQs and all, so that they also become little big. The market is growing, they will also grow.
Yeah, and one just follow-up. With 11 crores of capex in veterinary, what kind of revenue you are expecting to generate from that capex?
Yeah, I think generally we do around 5 to 6 times of the investment what we do. So this can be done easily more. So right now, we are installing approximately 11 CR for our main is for kibbles and all. But I feel we can do around maybe 5-7 times of our investment.
Okay. Yeah. Thank you, and all the best for the future.
Yeah. Thank you.
Thank you. The next question is from the line of Ashwini Agarwal, an individual investor. Please go ahead.
Hello.
Yes, sir. Please go ahead.
Yeah, I just wanted to know, in an interview during the IPO times, you said that you have a internal target of reaching 180 to 200 CRs of turnover for FY26. So do you think it will be possible for us now?
We are on track, sir. We are definitely on track, and the way we are moving ahead, we will try our best to achieve that. That is for sure. Because actually, I don't want to confide right now because I've been told to be limited, but rest assured, we'll try our best. And we are very positive.
And you just mentioned about the Tanzania audit in December. So, can you tell us a bit more about the African market as a whole? Because right now I've heard that a lot of export and nutraceuticals and stuff are happening to Africa. So if you can elaborate a bit on that.
Yes, why not? See, basically, ultimately, every country who is dealing in nutraceutical or food supplements are evolving. So we are lucky that India has already been working since last 10 years, and FSSI is doing very well right now. So there is a legal framework is very good. Every country, let's say Nigeria or Tanzania or Kenya, African countries which are a little bit behind India, are also trying to cope up with the regulatory framework. So that's why these approvals and all are required. It's not compulsory or mandatory, but it's like it will have an edge if you have a Tanzania approval or a Nigerian approval. So because we are now preferred there as per that, and our registration, everything goes very smooth there. So the African market is growing, sir. Globally, if you see, I think it's billions of dollars of market. As India is growing, all the preventive healthcare and supportive healthcare is going to grow. जो हम बचपन से सोच रहे थे दादी माँ का नुस्खा prevention is better than cure. This is the thing which is there in the market, and it's globally same, sir. So African market also is growing. I don't have exact figures to tell, but the orders have been amazing, and we also grew. If you want, I can share you personally some stats that our export also from last year has increased a lot in this areas. See, we don't do direct export. We do through merchant exporters. That's why I need to remove the figures, how much we are contributing. But every month we are sending some containers or something to these areas, and I think they are growing well. And in exhibitions when we go and when we meet this area people, maybe the geographical area people, so we find very positiveness in them, and they also say that the market is growing exponentially.
Oh, thank you.
Yeah,
Thank you. We have a follow-up from the line of Shruti Malpani from Art AIF. Please go ahead.
Hello. Sir, actually, I think I missed out in between. Can you tell us more about the Tanzania deal? Like, what is it and...
It's not a deal. Yeah, so Tanzania we already are doing, ma'am, through merchant exporters. Now, their current guidelines, they have started a program where they want the international companies who are exporting them to take licenses and all. So Tanzania is, so we can take, it's not mandatory 100% that if we don't do our business, we're not going to collapse. But keeping in mind the future aspects, it will be nice that if we take an approval and we get Tanzania approval. So they have planned their visit in December, and hopefully everything goes well, then we'll get approval. So we'll try our best to achieve that.
So, like, do we expect to increase our share from there for top line? And if yes, then,
yes,
what rough figure?
We have orders in hand. We have orders in hand with the current companies also, Tanzania, where they can explore a lot of, like, once our sites gets registered there, it's become very easy for the marketer to market there. So it's not that it's illegal to market, but their approval process, the timelines, the fees, everything gets reduced. So the second the marketer who will do, they have to pay 50% of fees than the initial. So this all helps them in creating their segment there. And in long run, all the countries will have a good framework. Surprisingly, US and all don't have a framework. So a proper framework than the Nigeria or the Tanzania. So they also improving that way.
And sorry.
Sorry. Tell me.
Yeah, you were saying?
I was saying that currently all the markets are exploring, and Nutra in every country is growing. Even cosmetics, this all are doing very well overall of the world. So every country is going to improve now, because all multinationals have entered into this. They see a lot of opportunity in preventive and supportive segments. So country will have their guidelines and all improve.
So, like, what percentage of our top line currently, we get from exporting to Tanzania?
Tanzania, we are doing, I think, a small portion, not much. We are doing around, maybe somewhere around, don't quote me right, around 50 lakh or 1 CR maybe. but it can be improved over the years. And we as a company have thought to increase our presence globally. So we are targeting, like all the African countries. So maybe again next year we'll take 3-4 approvals. We'll try to get there. So this is our mission as a company, that we want to have our presence in multiple areas or geographical areas.
Okay. What other countries are we, expecting to?
We are NAFDAC approved. We are Nigerian approved plant. We are first in Maharashtra to do it in Nutra space. We are NSF certified, so that means it opens my European and US market. We are only FSC 22000 NSF certified in Maharashtra to get the certification. So it explores our US and the European market. If you see the biggest client, Novus, which is already there, because of this certificate NSF, they have been able to export to the US now. So they have started their US export also, which is going to boom. Maybe we'll get good orders from the Novus, because they are registering their products there right now. So this is their process. So maybe in a couple of months' time, you'll see a lot of production happening for the US market, because we have the certification.
Okay. Thank you.
Thank you. Participants, please limit your questions to one question. The next question is from the line of Shreyans Gathani from SG Securities. Please go ahead.
Hi, thanks for the follow-up. So I had one question. So with the expansion, that we're doing, and we expect the company revenues to grow, could you give some color on how you're building up the team and in terms of hiring and leadership that you're doing? Because at this point, you are the main person, but at 500 crores, you definitely need a bigger team to handle a lot of the operations.
Yes, I completely understand, and we have ultimately factories on auto mode only, maybe, but I still realize that we have to build the team, and we are on it. Right person should be on the right place. We have added our new assistant managers in production also. My CEO has bottom line. The problem will not be for me. The problem will be for my immediate team members. That's my CFO, my CEO, because they are also operating at that scale. So we have started building the layers, and definitely we have that in mind, and I understand completely that this has to be done, and it will be done soon when we get the right people.
Okay.
We have started that on the lower and the middle level also. We have employed a lot of, if you see our capex also, expense also increased is because of that only, because we have been hiring and trying to, offload a lot of load from our top level.
Got it. Okay, that's very helpful. Thank you.
Thank you. The next question is from Sahil Raj from SAM. Please go ahead. Mr. Raj, your line is unmuted. You may go ahead. As there's no response from this line, we'll move on to the next question, which is from the line of Deepak Janeja from HNI. Please go ahead.
Sir, my question is, so with the installed machinery capacity, we'll go to 2.5 times to 500 crore revenue, correct?
Yes.
So, sir, in this, do we have that much demand in the market? Like currently, we are at 70 crore, 67 CR for this revenue. Going forward, do you think we'll be able to, offload that much supply in the market?
Yes, sir, definitely. The market is amazingly poised, and we have been very choosy in getting new customers also. So the new plant will help us. See, the new plant we are building is BRC level. So let's say what I was talking is, this is NSF, right, certified. So that will be one step ahead of this plant also. So the bigger customers and all, like the multinationals may have a better chance, or we will have a better chance to pitch them our this unit, because that will have a bigger impact, and it will be a very, the thought is that to make a very good plant, which will be accepted in globally. So this plant, the old plant remains for definitely our customers who are old enough and the medium scale size, and the new plant will definitely target, because we will be having all automized machineries and all, so that can be targeted to bigger companies. The market is amazing, sir. I have no doubt, a pin doubt also that we can lose sales right now because there are a lot of opportunities ahead. There are a lot to do, and the market is doing very well. And all the people who are doing the marketing also doing very well. So that is also a good sign for us. Our clients are doing well. So they are expanding, and we are forced to expand. This is what is happening.
So what is the timeline, sir, for that automated plant you said?
So I said H1 is the this thing, maybe around June, maybe approximately.
Okay, got it. Thank you very much, sir, and all the best for future.
Thank you, Deepalji. Thank you.
Thank you. The next question is from the line of Sai Shreyas from Scientific Investing. Please go ahead.
Good evening, sir. Am I audible?
Yes. Yes.
Sir, congratulations on a great set of numbers. So could you please share the CapEx per kg for each of the business segment and the EBITDA margins for each of the business segment?
You want the CapEx per?
The CapEx per kg for each of the business segments. CapEx amount spent per kg.
So I'll give you that, sir, because I don't have the ready hand figures right now. So if you want, you can just contact the Capital Bridge and get back to you.
Okay, sir, and EBITDA margin for each of the segments?
That also I'll get you. The average EBITDA margin, I think we have mentioned in the presentation. If it's individual wise you want, definitely my team will give you, sir. Okay,
sir. I have a last question. In the PPT, they have mentioned that expect to increase capacity by 2.5x post utilization of IPO proceeds. So this 2.5x is based on the H1 capacity or the FY25 capacity?
So with the expanded version, we are talking. So it is like, let's say what figures we are taking. So FY25 figures will be doing 2.5.
Okay, so based on the FY25 capacity, it's the 2.5x growth.
Yes.
And what would be the long-term asset turnover, fixed asset turnover?
So generally, sir, 5 to 6 times is our multiplication time. This is what we are working. If you see historically, it is happening that way. So hopefully it will still go better. Maybe the operation will lead to a better figures. But you can say 5 to 6 times is yes. This is what can be done easily.
Okay. And sir, would the current EBITDA margin be sustainable down the, let's say,
yes, 3 years? I am very confident. Very confident, and the set of customers and set of profile of products what we have, we should able to do this, maintain this. We'll try to do better also.
Okay. Thank you, sir. I'll mail for the questions which I asked you.
Sure, sir. Sure. Thank you so much. Sure.
Thank you.
Thank you. The next is a follow-up from the line of Nishita from Sapphire Capital. Please go ahead.
Yes. So you mentioned that post the expansion of 2.5 times, we'll have a top line of 500 crores. When do you see us reaching this target of 500 crores in revenue? Do you see that happening in FY27 or maybe FY28?
So it will be like 3 years from down the line from now. Approximately that much. Every year this unit will, I will not able to, it's very fair to us also that we will not able to give you 100% capacity utilization in 1 year. It's too much task to do, but slowly definitely we'll add on because factory will be on, we'll be adding the sales to it. So slowly every year we'll build up, and then it's not that I'm going to give you 500 or 450 PR immediately. We'll try our best, but every year we'll build on this. So it will take minimum 2.5 to 3 years, ma'am. It's very practical.
And my last question would be that the beverage line for that the machines that you ordered, when is it going to be operational?
So as I said, factory will be operational in H1. Few machines we have already ordered because we can install it here and then transfer there. So we have identified that few machines cannot be done because the size of machines are big, which we cannot accommodate in the current facility or the new facilities what we have been added, the rented facility now. So the factory operational will be this because by Jan, Feb we will start ordering we have already lined up, but I feel by Jan, Feb this all will be ordered and it will start coming. The commissioning of the plant will be by H1 definitely, yes sir.
Okay. Understood. Thank you so much.
Thank you. The last question is from the line of Rohan Gupta, who is an individual investor. Please go ahead.
Hello.
Yeah, hi, Rohan.
Yeah. Hi, Munir ji. Good evening. Congratulations on the superb set of numbers. So firstly, wanted to ask you, this machineries that we've ordered, right, out of IPO funds, what is the exact timeline for this, like, installation?
So what we have ordered, one of the current what we have ordered in this.
Yes. You have put it in the presentation, some like a beverage line, and
Jan it should be, sir. Jan, because beverage line we have booked it, I think, 45 days back, approximately. So they have a lead time of 12 to 15 because it's a big plant. So maybe Jan I'm expecting it should be done.
Okay, and even all these other ones, pet food, then...
Somewhere it will come in near Jan only, because pet food also 1000 kg will be Jan end, approximately, because we have booked right now. Generally it is 60 days time, but with the transport and all, it will take 20-25 days more commissioning.
Okay.
So I am taking around...
potential would be how much from these?
The pet food will increase the capacity by 10x of current. So आप output capacity इतना बढ़ा सकते हो, and secondly, carbonation is a new thing only. So we will be doing 10,000 bottles per hour we can do. No doubt, we have to build up for this production. I cannot do in initial months only, but I have a very good feeling for RTD, and we have already started the pilot plant since 6 months. So we have been exporting to Caribbean islands this carbonation drinks and all, which are ashwagandha, nutritional based. So already the work has been done, the formulas are stable, we are confident to scale it up.
So sir, like you mentioned, right, in H1 you all expanded capacity by 25%, like an average number. So by Jan, say how much you expect this to further go up, say based on
similar pace will go, sir. Similar pace will go.
Similar, around 20-25% will be from...
We should able to do. Yes.
Okay. Sir,
a couple of good machines are going to come, sir, which is very innovative. If I get a chance, I'll send definitely what our numbers are, samples, because it's interesting. It's very interesting things to enter into this market.
Okay. So sir, this machines ordered is the 4 or 5 crore that you mentioned, right? Capex amount.
Yes. So we have given advances on also, let's say for machine cost is little higher, for example, but we have not paid completely, because once it is ready, then only we'll pay the balance amount. Right. So many, 4 or 5 machines are in line, which are the which we can accommodate in our existing setup. Major are there which we cannot accommodate. So we want our factory to be ready, the infrastructure, the civil, then we'll order, because then to keep it and to maintain will be difficult.
Okay, and sir, the remaining 24 crore which you mentioned that you will do it in FY27, the remaining IPO funds, right? 25 crore, I think. That will be in which month? Like, can we expect it in April or May, or it will be further down the line?
Sir, I think June you can expect approximately, because of rains. I think we are 1.5 months back, sir. That is very honest with you. We are behind, and rain didn't support us, the excavation and all. But we'll try to cover it up.
Yeah,
May, June is a figure which is
already via internal accruals. So
yeah, so this is what there are some, maybe in future we'll give you a better news also for other.
Okay. Sir, now coming to the balance sheet, there is a 33 crore in current investment, investment in securities. So this is the IPO funds which we parked in, say, some mutual funds or something, or what exactly is it?
Yeah, it's an IPO fund only, sir.
Acha, we put it in some mutual funds or something, yeah?
We have put into the RBI account, so that we don't, we are very frugal in doing. Whenever required, we are taking out from there. We are not keeping in our regular accounts.
Acha, then it's fine, yeah, that gives some comfort. And sir, lastly, like you mentioned, Carbamide Fort is your largest client, right? So, I mean, their reported numbers, they did 50 crore in FY24. But what I have heard on, ground reports is that they are already doing 200 crore in revenue.
So I also tried my best. I also tried my best to remove the figure, but they have never told me.
Yeah,
but they are doing amazingly well.
I'm telling you, which I think should be accurate. They must be around a 200 crore sort of, run rate. So Do you think you
70-80% business is happening from us. That is for sure, because I'm very closely associated with them. Yes, for them also, we have installed the capsule capacity. They have their vision to expand in US market, so we did NSF.
Right.
We are aligned with our clients, and Carbamide is one of the clients. There are other clients also who are there, who are aligned for all those things.
So considering their hyper growth and, you are a perfect fit for them, like you mentioned, for exports and everything, are you planning any dedicated sort of line only for them, a dedicated small unit for them? That way you'll have the volume offtake also fixed and, will be good.
We definitely are thinking for that, because they also require that way, because they have a very good growth plan ahead. In fact, few days back only we had some meeting, and they have shown their projections, what they require. So we are working on that. Let's see if everything goes well. We'll take a decision that time and do the needful.
Understood. Okay, sir. This was very helpful. Thank you and all the best.
Yeah, thank you so much, Ranveer.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Dr. Munir Chandniwala for closing comments.
Yeah. I thank you everyone who has joined, and appreciate your questions. Hope I was able to answer it well. If anything I have missed out and you are not convinced, please mail us. We would like to definitely answer your queries, and we want to be very transparent and clear about it. We also invite people who have not come to our factory. Please come to our factory, see our facility, see our development which is happening. I request them. You can just note your names with our Capital Bridge partners, IR team. They will help you out. Thank you so much again for joining, removing time for us, and keep your blessings with us.
Thank you very much, everyone. On behalf of Capital Bridge Advisors, that concludes this conference call. Thank you all for joining us, and you may now disconnect your lines. Thank you.